Hello and welcome to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze candidates. Today, we're putting a spotlight on a company that's been grabbing attention on our screeners, Global Interactive Technologies Inc., trading under the ticker GITS. This isn't just a generic lesson, we're breaking down exactly what makes GITS a stock that short sellers are currently paying a premium to bet against. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo / GITS chart. Let's get straight into Global Interactive Technologies Inc., or GITS. This company operates in the communication services sector, specifically within internet content and information. Headquartered in South Korea, GITS acts as a technology-focused platform company through its subsidiary, developing and operating Filings, a digital fan engagement platform. Think online communities, content sharing, and user interaction, all built around fan culture. With a market capitalization of just $9.07 million, GITS is a micro-cap stock, which can mean higher volatility and unique dynamics. Looking at recent price action, GITS has shown some significant movement. Today alone, the stock is up an impressive plus 22.90%. Over the last 5 days, it's gained plus 24.64%, and looking back a month, GITS is up plus 19.0%. This upward trend is accompanied by significant volume. Today's volume stands at 412,143 shares, which is nearly 9 times its 30-day average volume of 47,368 shares, giving it a relative volume of 8.7x average. This kind of activity is definitely something that catches the eye of anyone tracking unusual market behavior. What is cost to borrow and why it matters? Before we dive deeper into GITS, let's quickly explain one of the most crucial metrics for hard-to-borrow stocks, the cost to borrow, or CTB. When a short seller wants to bet against a stock, they first need to borrow shares from a broker. They then sell these borrowed shares, hoping to buy them back later at a lower price to return them, pocketing the difference. But borrowing isn't free. There's a fee involved, the CTB, which is paid to the lender of the shares. This fee is typically expressed as an annualized percentage. Why does it matter? Because a high cost to borrow means it's expensive to maintain a short position. This creates significant pressure on short sellers, especially if the stock price starts to rise. And yes, these fees can absolutely exceed 100% annualized. Imagine paying more than the stock's value just to hold a short position for a year. It reflects extreme demand to short a stock combined with a very limited supply of shares available to lend out. Why this stock is hard to borrow right now. Show GITS CTB stats on screen. Now, let's talk about why GITS popped up on our hard-to-borrow screener. The annualized cost to borrow fee for GITS is currently an astonishing 932.3%. Emphasize number that's nearly 1,000% per year just to hold a short position. To put that in perspective, anything above 10% is considered high. This extremely high CTB for GITS signals immense demand from short sellers to bet against the company, coupled with a severely restricted supply of shares available to borrow. Our data shows an estimated float of 2.4 million shares for GITS, which is a relatively small number, making it easier for borrowable shares to become scarce. While the exact number of shares currently available to borrow is unknown at this very moment, a CTB of 932.3% strongly suggests that the supply is extremely tight. Our internal composite squeeze score for GITS, which factors in CTB, borrower supply, float size, and price momentum, currently stands at 42.5 out of 100. It's important to remember, though, that a high cost to borrow does not automatically guarantee a short squeeze. It can also indicate that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. Squeeze mechanics explained. So, what is a short squeeze and how does it relate to a stock like GITS? Show animation of short squeeze. Imagine short sellers betting against GITS. They borrow shares, sell them, hoping the price falls. But what if the price starts to climb instead, perhaps due to positive news, increased buying interest, or simply an influx of retail traders? As the stock price rises, short sellers' losses mount. The incredibly high 932.3% CTB on GITS further amplifies the pain, as their daily cost to maintain the short position are eating into their capital. Eventually, some short sellers will be forced to buy back shares to limit their losses or meet margin calls. This act of buying back shares to cover their short positions creates buying pressure on the stock. If enough short sellers are forced to cover simultaneously, this buying pressure can snowball, pushing the price even higher, which in turn forces more shorts to cover. This escalating chain reaction is precisely what we call a short squeeze. With GITS' small estimated float of 2.4 million shares and that astronomical CTB, the conditions for such a scenario could be present if enough buying pressure emerges. Dilution risk check. One critical factor to consider when evaluating any potential short squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can happen through various means, like secondary offerings or convertible debt. Why is this a concern for squeeze plays? Because issuing new shares adds supply to the market. Even if short sellers are buying back shares to cover, if the company is simultaneously flooding the market with new shares, it can significantly offset or even negate the upward price pressure from short covering. More shares mean less impact per share from buying demand. For GITS, we've checked recent SEC filings and found no recent diluted SEC filings such as SMINUS-1, SMINUS-3, or 424B forms within the last 90 days. We also found no recent reverse splits in our look-back window. This lack of recent dilution is a positive sign for potential squeeze thesis, as it means fewer new shares are likely to hit the market to absorb any short covering demand. Once again, please remember. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For Global Interactive Technologies Inc. and its unique setup, here are some key things to watch for. Show a GITS chart again, continue monitoring that astounding 932.3% cost to borrow rate. Any sustained decrease in available shares to borrow should the data become publicly available would be a significant indicator. Keep an eye on the volume and price action. The 8.7x relative volume today and the recent plus 22.90% jump are positive signs of increasing interest. Look for sustained buying momentum and potential breakouts above key technical resistance levels. While the high CTB on GITS signals that it's expensive to be short, always remember that short sellers can have strong convictions and may continue to pay high fees if they believe the stock is ultimately headed lower. The interplay between these factors will determine if GITS ultimately experiences a significant short squeeze. Global Interactive Technologies Inc. GITS certainly presents an interesting case study in the hard-to-borrow universe. With its microcap status, digital fan engagement platform, and a staggering 932.3% annualized cost to borrow, it's a stock that demands attention for those interested in short squeeze dynamics. We've broken down why GITS is hard to borrow, how a squeeze could materialize, and the importance of monitoring dilution risk. Always conduct your own thorough due diligence. If you found this deep dive into GITS helpful, please hit the like button, subscribe for more unique stock analysis, and let us know your thoughts or any questions you have about GITS or hard to borrow stocks in the comments below. We love hearing from you. Thanks for watching, and we'll see you in the next video.